BitMine Immersion Technologies has transformed from a small crypto-focused technology company into one of the most aggressive Ethereum treasury companies in the public markets. Instead of relying primarily on traditional business operations, BMNR's investment strategy is centered around accumulating Ethereum, staking those assets, and potentially increasing Ethereum exposure per common share. This makes BMNR a very different type of stock. Investors are essentially getting a leveraged public market exposure to Ethereum, combined with the potential benefits and risks of corporate treasury management. The core investment thesis behind BMNR is simple. If Ethereum becomes significantly more valuable over the next several years, the value of BitMine's enormous Ethereum treasury could increase dramatically. The company can potentially create additional value through staking rewards and by raising capital when its shares trade at attractive valuations. The most important question, however, is not simply whether BMNR's total Ethereum holdings increase. Investors need to determine whether Ethereum holdings per diluted share increase over time. If ETH per share grows faster than the share count, shareholders can benefit. If dilution grows faster than the treasury, shareholder value can be negatively affected. Ethereum is now the centerpiece of BMNR's balance sheet. By August 2026, BitMine had reported approximately 5.85 million ETH, representing roughly 4.8% of Ethereum's total supply. The company has therefore become one of the largest corporate holders of Ethereum in the world. This enormous position makes BMNR highly sensitive to changes in the price of ETH. For example, with approximately 5.85 million ETH, every $1,000 move in Ethereum theoretically changes the gross value of the company's ETH holdings by approximately $5.85 billion. This demonstrates both the enormous upside potential and the enormous downside risk. Staking is another important component of the BMNR strategy. Instead of simply holding Ethereum, the company can stake a portion of its ETH and generate additional Ethereum over time. If staking rewards are consistently reinvested, BMNR could potentially increase its Ethereum holdings without relying entirely on new capital from investors. This creates a potential compounding mechanism. However, staking returns are not guaranteed, and the economics depend on Ethereum network conditions, validator participation, fees, and the company's ability to efficiently manage its staking infrastructure. Traditional revenue is becoming less important to the BMNR investment story. Earlier financial results showed a significant increase in revenue, with Ethereum staking becoming an important contributor. However, investors should understand that BMNR cannot be valued in the same way as a normal software, telecommunications, or consumer company. The company's financial statements can be heavily influenced by cryptocurrency prices and digital asset accounting. Therefore, revenue growth is worth monitoring, but Ethereum holdings, staking income, cash, liabilities, and diluted shares are much more important when evaluating the company's underlying value. Forecasting BMNR's earnings per share is unusually difficult because accounting earnings can fluctuate dramatically with cryptocurrency prices. A large increase in Ethereum's market value can produce significant accounting gains, while a crypto downturn can create substantial losses. Because of this volatility, a traditional price-to-earnings valuation is not the best primary method for analyzing BMNR. For 2026 and 2027, I would focus more heavily on adjusted net asset value, Ethereum holdings per share, and staking economics rather than attempting to assign a conventional PE multiple to the company. For my 2026-2027 scenario model, I would estimate approximately $40 to $70 million of revenue for 2026 and roughly $75 to $125 million for 2027, although actual results could be substantially higher or lower. These are analytical estimates rather than company guidance. The biggest variable will be the amount of Ethereum being staked, the staking yield, and the company's overall treasury strategy. More importantly, investors should not confuse revenue growth with shareholder value creation. BMNR can grow revenue while still destroying value if dilution and financing costs become excessive. Capital raising is one of the most important issues investors need to watch. BMNR has used equity financing to acquire additional Ethereum, and its share count has increased significantly. This can be positive or negative depending on the valuation at which new shares are issued. If BMNR sells shares at a substantial premium to the underlying NAV and uses the proceeds to acquire ETH in an accretive way, existing shareholders can potentially benefit. But if the company issues shares at or below NAV, existing shareholders could experience dilution. Therefore, the critical metric is not simply total ETH holdings, but ETH per diluted common share. Another part of BMNR's capital structure is its preferred stock. The company introduced a 9.50% series, a perpetual preferred stock, providing another source of capital for the treasury strategy. Preferred financing can help the company acquire additional assets without immediately issuing as many common shares, but it also creates an ongoing financial obligation. Investors therefore need to monitor preferred dividends, total liabilities, and the relationship between preferred capital, common equity, and the value of the Ethereum treasury. A traditional discounted cash flow model is not particularly useful for BMNR because most of the company's economic value is tied to its digital asset treasury. A better approach is to estimate adjusted net asset value. With approximately 5.85 million ETH, Ethereum at $3,000 would imply an ETH treasury value of about $17.55 billion. At $4,000 ETH, that becomes approximately $23.4 billion. At $5,000, approximately $29.25 billion. At $6,000, approximately $35.1 billion, while an $8,000 Ethereum price would imply approximately $46.8 billion of gross ETH value. These numbers exclude cash, other assets, liabilities, preferred claims, and the effect of future changes in the ETH balance. The market does not necessarily value BMNR at the exact value of its underlying Ethereum holdings. Investors can assign a premium because BMNR provides publicly traded exposure to Ethereum, staking, treasury management, and potential future ETH accumulation. However, that premium can also disappear very quickly. This is one of the biggest differences between owning Ethereum directly and owning BMNR. Even if Ethereum remains stable, BMNR's stock price could decline if the market decides that the premium attached to the treasury strategy is too high. In my bull case scenario, Ethereum enters another major growth cycle and reaches approximately $6,000 to $8,000. BMNR continues accumulating Ethereum while generating staking income, and management successfully raises capital without excessive dilution. Under these conditions, the company's NAV could rise substantially, while investors may continue assigning a premium to the stock because of its strategic Ethereum position. In this scenario, I estimate a potential 2027 BMNR price target of approximately $45 to $60, with an extreme bull scenario potentially reaching above $65 if Ethereum experiences an exceptionally strong cycle. My base case assumes Ethereum performs well but does not enter an extreme speculative bubble. I would use an Ethereum price range of approximately $4,000 to $5,000 for this scenario. BMNR continues staking and accumulating ETH, but investors become more disciplined about the company's premium to NAV. Under these assumptions, I estimate a 2027 BMNR price range of approximately $32 to $42, with a central target around $37 to $38. This scenario represents meaningful upside, but also recognizes the possibility of valuation compression. The bear case is where BMNR becomes particularly risky. If Ethereum enters a prolonged crypto bear market and falls toward approximately $1,500 to $2,000, the value of BMNR's Ethereum treasury could decline substantially. At the same time, investors could reduce the premium assigned to BMNR, while additional equity financing could create further dilution. Under this scenario, I estimate a 2027 price target of approximately $15 to $22. A severe crypto market downturn could potentially push the stock below this range. My 2027 scenario framework is approximately $15 to $22 in the bear case, $32 to $42 in the base case, $45 to $60 in the bull case, and potentially above $65 in an extreme bull scenario. The biggest variable behind almost every scenario is Ethereum. Therefore, BMNR should be viewed as a high beta Ethereum investment rather than a traditional fundamental growth stock. The company's own execution also matters because changes in ETH holdings, share count, and financing structure can significantly change the value available to each shareholder. BMNR's biggest potential competitive advantage is the scale of its Ethereum treasury. Controlling approximately 4.8% of Ethereum's total supply gives the company enormous exposure to the future growth of the Ethereum ecosystem. If Ethereum becomes increasingly important for stablecoins, decentralized finance, tokenization, payments, and institutional blockchain applications, a large strategic Ethereum treasury could become increasingly valuable. The company's staking strategy could also allow it to generate additional ETH over time. The biggest risk is Ethereum itself. BMNR is highly dependent on the price and long-term adoption of ETH. If Ethereum rises significantly, BMNR could benefit from increasing NAV, staking rewards, and potentially a higher market premium. But if Ethereum falls sharply, BMNR can suffer from both declining asset value and declining investor sentiment. This creates a double risk because the stock can fall due to lower Ethereum prices and simultaneously lose its premium to NAV. Dilution is the second major risk. Investors should closely monitor the relationship between newly issued shares and newly acquired Ethereum. A simple metric I would track every quarter is ETH per diluted common share. If total ETH increases by 20%, but the diluted share count increases by 30%, shareholders are not receiving proportional growth in Ethereum exposure. On the other hand, if ETH holdings grow faster than diluted shares, the strategy becomes much more attractive for existing shareholders. Another major risk is premium compression. Suppose BMNR's underlying adjusted NAV is worth $20 per share, but investors are willing to pay $30 because they expect rapid future growth in the Ethereum treasury. If sentiment changes and the premium falls, BMNR could decline even if Ethereum itself does not collapse. This means investors need to monitor not only Ethereum's price, but also BMNR's market capitalization relative to its adjusted treasury NAV. BMNR is one of the most aggressive ways to obtain public market exposure to Ethereum. It offers potentially enormous upside if Ethereum continues appreciating and management successfully increases ETH per share. The company also has the potential to generate additional returns through staking and treasury management. However, it carries significantly more risk than simply owning a traditional profitable company because investors are exposed to Ethereum volatility, dilution, financing risk, preferred obligations, and premium to NAV compression. My final 2026-2027 rating for BMNR is speculative buy for high-risk investors and hold for conservative investors. At a market price around the mid-$20s, in the latest data used for this analysis, my base case 2027 target of approximately $37 to $38 suggests meaningful upside, while the bull case could potentially reach $45 to $60 or higher. However, the bear case shows that significant downside remains possible. The most important numbers to watch every quarter are Ethereum holdings, ETH per diluted share, adjusted NAV per share, staking income, share issuance, preferred obligations, and the premium or discount at which BMNR trades relative to its underlying Ethereum assets. Ultimately, BMNR is not simply a stock market investment. It is a high-risk bet on the future value of Ethereum and the company's ability to compound that exposure for shareholders.